Okay, we'll now start back with problem 17-2A. And if you're in the larger book, it's on pages 822 and 820. It's on 822. If you're in the smaller book, it's PR2-2A, the managerial only book. I'm not sure the page number there, but I'm sure you'll find it. Okay, now on C, it says factory overhead cost incurred on account. Okay, this is actual factory overhead, so it's going to go on the books as a debit to the factory overhead account. $5,500. And we're going to credit the costs were incurred on account, so we'll credit, of course, accounts payable, $5,500 as well. Okay, then on D, depreciation of machinery and equipment. Well, depreciation would be a factory overhead cost. Actual factory overhead again. So it goes on the books as a debit to factory overhead. $1,980. A good year for the band Blondie, if you're a Blondie fan. Alright, depreciation of machinery and equipment. The credit there is still going to be to accumulated depreciation, machinery and equipment. It's $1,980. Okay, on E, they tell us the factory overhead rate is $54 per machine hour. Now, you guys, what they do, the way they determine this rate, at the beginning of the month, they estimate what they think their actual factory overhead cost will be for the month. And then they divide that by some base that they consider to be driving the overhead cost. Here they're using machine hours. So they're saying a lot of our overhead is depreciation on machinery and equipment, and maybe maintenance on machinery and equipment could be in some of this. So if most of their overhead cost is driven by using the machinery and equipment, then that would be a good base to use to allocate the overhead to the actual jobs. So what they're doing here, they'll estimate the total cost for factory overhead for the month and divide that by estimated machine hours. They come out with a rate of $54 per hour. That allows them to cost a job like 301. We'll know the direct materials cost for 301 when the job's completed. We'll also know the direct labor cost. But some of these overhead costs, like electricity, the water bill on the plant, some of those costs, we're not going to know those as soon as job 301 is completed. So what we do is estimate them and include them in this overhead rate. That way we can cost a job or determine the cost of a job as soon as it's completed, go ahead and set the sales price and sell it. Now we hope we estimate perfectly, like we mentioned earlier. Of course, we're probably not going to. We'll see how close we get as we start to wrap up the problem. But our estimate of factory overhead, which is what we're doing here in E, there we're going to debit work in process. So what's included in work in process is actually the amount of factory overhead included in work in process is actually an estimate, so that we can determine the cost of the job at an earlier date. So we're going to take the rate per hour of $54 times total machine hours of 228, and that gives us a debit to work in process of $12,312. We're going to credit factory overhead. Our estimate of factory overhead goes on the books as a credit. It was $54 times 228, $12,312. Okay, then on F, some jobs were completed, and so the jobs completed would be transferred into finished goods and out of work in process. But before we can make the journal entry here on F, we need to determine the cost of the jobs that were finished. And they give us a chart to do that on. Computation of cost of jobs finished. Well, direct materials on 301, you have to go back up to B. The materials used on job 301 were $29.60. On 302, $36.20. On 303, $2,400. And on 305, $5,100. You might be wondering why we skipped 304 and 306. Well, obviously those jobs were not completed. This is cost of jobs finished. So 304 and 306 must have not been completed by the end of the month. Alright, so let's pick up direct labor. That's our factory labor cost for each job. 301, $27.75. 302, $37.50. 303, $18.75. And 305, $52.50. Now, to determine overhead on each of the jobs, we're going to use our rate from E. So let's look at the information given to us on E. On job 301, we use 25 machine hours. So that's 25 hours times our $54 per hour rate. Gives us $1,350 of overhead on job 301. 302 is 36 hours times our $54 rate. So it's $1,944 of factory overhead on job 302. 303, 30 hours times our $54 rate, $1,620. And then on 305, 40 hours times our rate of 54 per hour, which is 2,160. Now we want to sum these across. So we'll add together direct materials, direct labor, and factory overhead for job 301. So it's equal to the 2,960 plus the 2,775 plus the 1,350. It won't let me use my sum function above. I'm not sure why. Maybe it'll let me drag this down. Let's see. Just copy that formula in. And that did the same thing. We just added these across to get the 9314. And just giving it a quick look, that seems about right. Okay, then we want to sum this column. Again, we don't have the sum button, but we're going to go equals 7,085 plus 9314 plus 5895 plus 12,510 was 34,804. That's the total cost of the jobs that were completed during the month. Okay, you guys, the jobs that have been completed are now a part of finished goods inventory. So we're going to debit finished goods for 34,804. But if the jobs have been completed, they're no longer a part of work in process. So we're transferring their cost out of work in process and into finished goods. So we need to credit the work in process account. 34,804. Okay, and that takes us through F. Then on G, okay, they tell us In F, they did tell us which jobs were completed. 301, 302, 303, and 305. They're included here on your chart. On G, jobs were shipped and customers were billed as follows. Now, of the jobs that were completed, here are the ones that were sold and their sales prices. If we're billing customers, then they didn't pay us immediately, so the account we're going to debit here for this total of the sales prices would be accounts receivable, since we're billing the customers for these amounts. And let's add them up. Our sales price on job 301 was $82.50. On 302 was $11,200. And on 303 was $15,000. Okay. For that same amount, we're going to credit sales for the total of the sales prices, which we have here, $34,450. Okay, but now, just like when we were selling merchandise back in financial accounting, if we're selling manufactured goods, we've got to make two entries. One entry at the sales price to increase the asset account, either cash or accounts receivable, and to increase the revenue account sales. Then we have to make a second entry at cost. So at cost, we want to debit cost of goods sold and credit finished goods inventory. But we need to determine the cost of the jobs that were completed. Computation of cost of job, or excuse me, not completed, but sold. Computation of the cost of jobs sold. Well, what we'll do is go back up to our chart, computation of cost of jobs finished, figure out the cost of the ones that were finished, just move those down here for the ones that were sold, right? So 301 was sold, its cost was $7,085. 302 was completed, its cost was $93.14. 303 was completed. Its cost was $58.95. And then we'll add those together to get the total cost of jobs sold, or cost of goods sold. This is the account title we're going to use. We're just adding these three together. And we get $22,294. And that's the number we want to use here, $22,294. It's a debit to. We're transferring these goods have now been sold. So their cost is no longer an asset, finished goods. Right? They're no longer a part of finished goods because they've now been sold. So their cost now becomes a part of an expense account, cost of goods sold. And the account to credit is the inventory account, finished goods, $22,294. Now that takes us through the journal entry portion. And let's look at what happened here. Really, we just kind of moved from, we started out with our materials as part of raw materials inventories, what I would call it. Those were purchased on account. Then the materials were moved into work in process or factory overhead. Direct materials and direct labor became a part of work in process. Indirect materials and indirect labor became a part of factory overhead. We credited wages payable for total labor and materials for total materials. We debited overhead and credited accounts payable for overhead costs incurred on account, actual cost. We debited factory overhead and credited accumulated depreciation for actual factory overhead cost incurred for depreciation. Then we placed our estimate of factory overhead for the month into work in process so that we can cost the jobs as they're completed and go ahead and sell them. So we're not waiting on, we're not waiting until we complete the job in January. We're not waiting until sometime in February when the electric bill comes in to determine the true cost of the job. Instead, we make an estimate, and that's what we're doing here on E. Then, once the jobs are completed, it's the wrong account there. I didn't mean to change that. That should be a credit to factory overhead, wherever that is. Just clicked in the wrong thing there. Okay, once the jobs are completed, we're going to transfer their cost out of work in process and into finished goods. So we debit finished goods and credit work in process for the cost of the jobs that were finished. Cost of jobs finished, which we totaled here. Okay, then, for the jobs that were finished and sold, we're going to debit accounts receivable because they were sold on account for the total of the sales prices from G. We'll also credit sales for the total of the sales prices from G. Then we're going to debit cost of goods sold for the cost of the 3 jobs that were sold, 301, 302, and 303. We computed that in our little chart here, but really all we did was move down the total cost for the ones that were completed from our chart up above. And we transferred the cost into an expense account, cost of goods sold, and out of the asset account, finished goods. So really, these journal entries just kind of show the flow of the jobs. They start out as raw materials inventory. They become a part of work in process inventory, where direct labor and factory overhead, which are called conversion costs, are used to convert those raw materials into finished goods. And once the finished goods are sold, we'll transfer the cost out of finished goods and into cost of goods sold. That takes care of instruction 1. We'll look at instructions 2 through 4 in the videos to follow. Thanks.